actually, I'm based on, I'm gonna just share with you guys a few articles. As we didn't do last week, I'm gonna take a little bit extra time. There's some important news I wanted to highlight here that's very pertinent to you guys here, to all of us rather. So speaking of what Sarah just shared here, it's populating. My apologies. My internet connection has been lagging lately. So title of this article here, sorry, this is not the one. Right here. Mortgage education gap may be keeping potential customers away. Survey finds nearly 40% of homeowners don't understand their mortgage options, right? So yeah, if you read through this one, basically saying that a lot of clients end up, dismissing their initial broker or mortgage lender because they just don't quite understand what their mortgage options are. And more importantly, they don't know what the fees are. Okay, right here. In total, 20% says hidden fees are the most confusing part of the process. Look, everyone operates differently. I, as a loan officer, I've been doing this for quite a bit, since 2009. Transparency has been the key for me. Okay. Yes, there are times I will lose a deal, or rather I might not win the deal, because a client's like, you know what, I don't like what you're offering. But I'm not saying all the time. Many times I have clients come back and saying, oh my goodness, Ragnar, I was bamboozled, I was tricked, I was conned, right? I really appreciated how you so transparent. Sometimes it's after the fact, right? They can't get it out of, they're about to close on escrow, or the refinance they need to get done. The rates went up, so they're kind of locked in and almost forced to go into that refinance they don't really want because of the fees. Look, transparency is key, guys. Okay, so it is so important. Look, we might think, oh, it's a rebate, I want to make this much. Hey, we're going to charge this much on Section A. In the case of Sarah, it might not be that important, simple, right? Especially if it's a brokered file, they're going to see Section A fees, and you're going to have to explain to them, hey, we're going to cover it for you, but why are you going to cover it for us?
I did explain to that. Peter actually was traveling at that time, and he managed the time to explain that we're going to cover the lender costs, which is that the initial disclosures and loan estimate, aka we have to, those charges have to be elaborated. We can't fabricate them. But she was just so fixated on Dream for All and the lender cost that was rebated by the broker. Right. Anyway, overall, I saved my money, and I got 2 other leads from this lender guy for a realtor. So
awesome. Very good.
It's her loss.
Yeah. I've been talking about over the past few weeks and the months about AI and how it's reshaping, how mortgages are being, really procured and how we operate now, right? So this is a great read, actually. It has other links. I've kind of went down a rabbit hole too. I'll admit for myself personally, I'm in a very elementary level right now when it comes to use and implementation of AI. I did challenge you guys, right, to adopt one way you can use AI in your business, right? So I know on earlier just shared about drafting emails. There's a link in here, right here in this one. If you guys don't follow MPA, you really should. That kind of the article really goes into detail of how and what and why lenders are using AI. But right, it's not just a matter of marketing now, right? It's about drip campaigns, and it's about even now using AI to see if the borrower is very intentional or not, right? The next stage of, and I'm kind of summarizing this, next stage of AI really is doing kind of the pre-underwriting, right? You can upload documentation, it can basically analyze it for you and spill out a decision, really. Now, that doesn't mean that it's going to obsolete the underwriter, right? There's always going to be need for that because it's not perfect, but you'll get you're basically doing the pre-approval portion, the TBD pre-approval portion up front through AI, really in a fraction of the time, right? It alleviates, obviously, you as a loan officer, not that this is an issue here at Giving Tree, but processing times, analyzing times, right? 1003s. And it really is up to the broker themselves to see how integrated they want to get. But it's very interesting. It's a good read. It's a good read. Christine, who's not on right now, was at the Mortgage Expo over the weekend. I forget if it was this past weekend or last weekend. And basically, and I spoke with her briefly, and she shared how just 3 years ago when I went, On was there, C was there, every mortgage company was talking about non-QM loans. That's all they talked about. Well, according to Christine, all they talked about this time was technology and AI, right? So while just a few years ago, we were all kind of like, oh, is this really going to happen? How much is this going to really? Now it's a matter of furthering AI. So if you guys haven't jumped on implementing AI, again, my challenge to you guys is to at least do one or two things. Now, that being said, the most important part of this article is this, the takeaway is in this paragraph, okay? On purchase transactions, the borrower and listing side still want an originator who understands the nuisance and anticipate issues and can explain the reasoning behind the numbers, okay? In a tight market, as it is right now, brokers win by delivering confidence, speed, clarity, and expertise, okay? So don't think that just because you implement AI and have all these powerful tools that you're going to be the best mortgage loan officer out there. No, you still need to shine. You still need to pick up the phone, okay? You still need to explain. You still need to walk the customer or the client through the process. Hey, something happened here. What's going on? Why did this happen? On a refinance, it might be a little bit different. A refinance can definitely be a lot more automated, but with a purchase, it may be different. I'm going to skim through the other ones real quick here. Guys, CFPB, mini CFPBs, quote unquote mini CFPBs creating risk for borrowers. It's really funny when after I, if it's okay to share, Peter, after I read this article, Peter calls me out of the blue nowhere and says, hey, asked me a question about a VA file I had done in Arizona. And I was like, oh my God. And basically, long story short, nothing happened, but there was a state audit because I'm not licensed in Arizona. And to that point here, cost of money, layoff of staffs, perhaps AI, the CFPB really isn't operating and it's doing its due diligence through regulations and compliance as thoroughly. And so states are now starting to pick up. So it's state of Illinois, guys, where Chicago is. They have a state oversight that's being enforced now. And that can set a precedent for other states. So in the takeaway here, really, guys, is to make a good effort and good, wise business decisions moving forward. Yes, as Michael has mentioned, right, as he's joined Giving Tree, there are many different types of programs and products and options that are going to be available to you, as many of you guys know. And some of the times you're kind of walking in the gray. The only warning I would say is, I'll read it here, to walk the straight and narrow, okay? To walk the straight and narrow. Just be aware and be aware and cognizant of what you're doing, okay? Some things are very blatant, but there are other things that are going to be that you may want to stay away from that causes a really red flag. Others might not be as clear, but just side on caution and really know what you're getting yourself into. So this one here, really for lenders, how brokers could be growing mega lenders, right? So right now, all across the industry right now, we are seeing takeovers. Companies are merging, small ones, medium ones are merging to become bigger ones. You're seeing like Cross Country and UWM potentially starting their own or taking over a servicing company, right? Billions of dollars there, hundreds of millions to billions. For you and I, the small brokers, we need to tidy up, right? The use of implementation of AI, but really, guys, here is the outreach, okay? Especially with the newer, younger generation buyers, okay? You need to explain more and more as this article covers how the younger buyer is using AI to find what lender to go, right? It's easy, right? You go on ChatGPT. I'm looking for this type of home, this purchase price. This is the down payment. This is roughly my estimated FICO score. Who's the preferred lender I should go to, right? If Giving Tree is not on there, if On Quan is not on there, if Alex is not on there, or Michael Park is not on there, you already have a losing battle, okay? Because the borrower is looking for through ChatGPT, and if you don't have an online presence, okay. And so really, how do you get on top of that? Well, one, you need to be reaching out more. Okay. I'm gonna stop there because that's obviously a very open-ended statement for a longer discussion about, hey, you should get on ChatGPT or on social media. You should have an online presence. It's about scaling. So you as loan officers need to learn how to scale. That will probably be for a much grander conversation, perhaps a training session that we can have. But you do need to stay on top of that. Finally, regarding rates, look, a war is going on. Inflation is up. The jobs data last week came out higher. And as we are seeing today, the bond market is up again. Expect to see rates, really tease us higher. Conversations about that again. We talked about this a few weeks ago, more on the payment, being a lot more thorough up front, having the borrowers commit by being thorough up front, and staying away from the actual rate talk. That's it for me, guys.